live stream. It's great to be with you. It's been a little over a week since I've been back in the cockpit, but here we are. So I want to review some charts, talk about what markets might bring in 2023. Needless to say, there's a lot of fear out there right now. So many are calling for an economic crisis of the sort. And in all reality, the signs are there. But could this turn into a situation where consensus surrounding an economic crisis leads to the alternative outcome? Because as a rule, consensus, once it forms in markets, about 70 to 80% of the move is already complete. So that being said, I'm not discounting the risks of a recession in 2023, but maybe it happens and it's milder than we thought. That remains to be seen. But what I want to do is look at some charts here, and we can discuss what is happening across several different asset classes. Starting off with the S&P 500, continue to decline from that high that formed on December 13th, catching a little bit of a bid on the day here Tuesday, but pretty much flat on the day. I think bulls really need to hold the line in the sand here at 38, 3,900. This is a pretty logical place of support for bulls to an attempt to make their presence known. And if successful, one can make a case that this is a higher low, but I think the bigger risk right now is this potential breakdown from the ascending price channel. These are known to be continuation patterns, and obviously no secret to anyone, the trend in 2022 has been lower. So, the rally stalled out in a very auspicious area, but not for students of technical analysis. We had the RSI indicator in corrective rally territory, and we even had a case of bearish divergence in price in the RSI indicator. But that being said, the RSI indicator remains in corrective rally territory between 40 and 60. So if we can find support here, we did actually dip a little bit below support at 38, 3,900. We fell as low as 37.95 on the day thus far. But if we can find support here, I think bulls are setting themselves up for a pretty good shot or a pretty good run for the Santa Claus rally period, which begins next Tuesday on December 27th. Keep in mind that's the trading period after the Christmas holiday, plus the first two trading days of the calendar year. So Santa Claus rally period will be between December 27th, and that will end on January 4th. And, it's an important time to watch as kind of a bellwether for the following year. Keep in mind that Santa Claus rally period for 2022 was actually positive, and we obviously are going to, in all likelihood, finish down in the year unless we have a very unlikely event where markets skyrocket into the end of the year. I don't think that's going to happen. But we know that anything is possible. 2020 taught us that. But the point I'm trying to make is that the Santa Claus rally period, known as the good bellwether period, you've often heard of the phrase, as goes January, as goes the year. So, that's another, end to that stick, so to speak. But I think if we get a positive return in the Santa Claus rally period, that sets us up for a nice, potential run in Q1. The alternative, I think, if we're going to go the recession route, is for stocks to fall into the end of Q1, beginning of Q2. We'll see what happens on that front. I want to take a look at the NASDAQ here as well. NASDAQ flat on the day, pretty much flirting. It's actually down a little bit, flirting with negative territory. And I actually wouldn't be surprised to see a scenario where, we're going to look at the Dow next. The NASDAQ is showing so much relative weakness. That's a pretty clean descending channel. One could even make a case that, and I'm going to actually remove this channel here real quick. One could even make a case that this is an inverted cup and handle. And, as someone who likes to trade breakouts, I'm usually not trading inverted cup and handles, but the NASDAQ it by far still looks like the worst index of the big three. And if we start taking out those lows from October, you could see a pretty nasty washout event. NASDAQ potentially falling as low as 7,500, 8,000. And again, I'm not even, one that's totally in the camp of severe recession in 2023. I think it's kind of been priced in to an extent. But if an index is going to fall another 20, 30%, I think the best candidate to do so is the NASDAQ. Take a look at the Dow. The Dow up a third of a percent here on Tuesday. Much more support underneath this market. And the fact that the Dow took out its high from mid-August is very much an important technical factor that needs to be considered. So as long as we're above support here in the Dow at 32,000, 32,500, I think bulls still have a shot. But I do think, and I tweeted about this earlier, that the leaders of the last decade or so, I think we're kind of cycling out of that. The growth in tech leadership, that was a big theme that we talked about coming into 2022. And now looking ahead into 2023, I think that continues. I do think there will be a good buying opportunity in some of these tech names. Like I saw that Amazon was trading at 12 times EV earnings and EBITDA. And so that's pretty cheap from a historical standpoint. So, I don't think Amazon's going out of business per se. But, you had Tesla down 30% on December and whatnot. But I do think the leadership is going to be in the industrials, the energy, the basic materials sector. Energy's obviously been a big leader this year. I don't think that's going to have the crown of leadership, at least in the first half of 2023, maybe the first quarter only. But I do think the strength that we're seeing in a lot of these industrial names shouldn't be neglected. And just to mention that point or highlight that point a little bit further, let's look at the Spider Industrial ETF. You see how that it took out that high from August as well. And we can even zoom out, as I like to say, when in doubt, zoom out. This is not the same type of chart that we see even when we look at, the tech ETF XLK. XLK is still, despite that rally that we had from October, still almost 30% off its highs, whereas XLI is, let's see, not even 10% off its highs. So, I think that we could be in an environment where you will see select stocks and sectors do well. And if you're going to ignore that very important price action, it's going to come at the expense of your portfolio. So I want to run through some other key things that I'm seeing in stocks right now. Obviously, the big news for some was that the Bank of Japan is going to let they're raising their rates a little bit in an attempt to fight inflation. That's really not a surprise. I've been talking about this with subscribers to the MMA currency report. We've been bearish on dollar yen pair for the last couple weeks. And we had a downside target at 130, 132, which actually we fell into that. I'm showing you the end of day chart here for dollar yen, but we basically fell into that price zone today. So if I would encourage you to check out our currency report at www.mmacycles.com if you are interested in the currency sector. But dollar weakening is a tailwind for stocks, and that probably explains part of the bid that we've seen today. But I do want to look at Turkish stocks really quickly, because this is something that we've shared ad nauseum for the last couple months here, and it continues to be a racehorse. I don't know that there's another equity market in the world right now generating the type of returns that Turkish stocks are. And, they're in a unique position. They have a little more flexibility with monetary policy. They actually do have a pretty impressive weapons manufacturing and industrial base. And we just talked about the industrial element of this relative strength that we're seeing. Let's take a look at the basic materials. I think that's another sector that is, it took out its high from mid-August. And I think that really is a good bellwether for, a sector that you're looking at. Should I be investing a lot of money in this sector? Should I be paying attention or whatnot? Did it take out that high from mid-August? If not, then, it's probably something you should avoid in the short term. We've talked about healthcare before. Healthcare, I think, is still a pretty constructive index, and for probably the NASDAQ's best hope going into 2023. We look at this chart here. Looks like we have a massive saucer pattern forming in this ETF, and it's actually projecting prices up into the 160, 170 area. So I'm still very bullish healthcare going into 2023. And, whether that's a function of, you're seeing, stories of medicine shortages, sometimes that can create a bid in assets. There's still, big time staffing issues in the medical field, and that could create demand as well. In fact, some of the top performing stocks in the healthcare sector this year were staffing companies, stuff like Cross Country Healthcare and whatnot. But I'm still pretty constructive on healthcare going into 2023. And I'm also a pretty big fan of gold going into 2023. Looking at gold miners, here, catching a nice bid up 4% on the day. And these are stocks that and sectors that we cover in more depth. Take a look at gold, catching a nice bid here. Gold looks to be breaking out from a broadening bottom formation. So I think gold's going to be a pretty big story. And if the dollar weakness persists, and if rates, rates are up a little bit today, but if rates at least, moderate in their decline or continue their moderation that they've been rallying for the last couple of weeks here, or bonds have been rallying, rates have been falling for the last couple of weeks here. But I'm actually not all that, bearish on real estate going into the first half of 2023 either. But I think that we have a good macro environment, especially in the context of a potentially weakening dollar, at least a dollar in correction mode. And, interest rates, the rise in interest rates cooling off, or at least, moderating. I think that's a good backdrop for precious metals because, keep in mind that metals don't pay any yield. So if yields are falling, when yields are rising, you get an incentive to buy bonds over precious metals, right? You're going to say, oh, I can get, 4% on a 3-4% on a 30-year treasury. And gold pays me nothing. So why would I buy gold? But now that rates are coming down, it's kind of an opportunity cost. You're buying metals more for the uncertainty and monetary policy going forward. And it does seem that, the monetary uncertainties are growing off the back of the BOJ, move yesterday. So I think that's important to keep in mind. Let's take a quick look at Bitcoin, because Bitcoin continues to consolidate near the lows. A little bit of a bid today, but overall the price action is still pretty bearish. So these are also this is another market that we cover in the MMA report. We have a daily report and about to publish the monthly ETF report where we cover SPY, GDX, the Bitcoin ETF, BITO, TLT, healthcare, tech, home builders. So I think that's a great report. If you are not as speculative minded, if you have any questions, feel free to drop me a message. Happy to answer those for you. But yeah, Bitcoin, not something I'd be rushing to buy right now. There's a lot of resistance in the $18,000-$19,000 area. We saw prices rejected there last week, formed another lower high, reinforces the existing downtrend. So just really not something that needs to be pressing the issue on, especially, there's reports swirling that, Binance could be, under some pressure now. So, coming into 2022, we were talking about the weakness in Bitcoin. We called our exit live, in crypto last November 2021. And, we've been pretty bearish on the sector for quite some time. I do think a big buying opportunity is coming, but I still am more keen on Ethereum over Bitcoin. And this is the last comment I'll make for this discussion. I'm running out of time here. The big thing for me is not seeing prices take out this low in Ethereum from June. If so, then I'm very bullish. And when it comes to crypto, I'm more bullish in the DeFi, decentralized finance elements of it, because I think there's more demand for that at a global level. And since Ethereum is kind of the bellwether DeFi coin, I would prefer to not see it. I would prefer to see it not take out its lows from mid-June. So that takes care of what I wanted to discuss with you today. Hope you enjoyed the video. Thank you much for watching. If you enjoyed what I talked about today, I would encourage you to check out some more of my work at www.mmacycles.com. Publish a few reports there with my good friend and colleague Raymond Merriman. And also at Benzinga, we do breakout reports, and we have a great weekly insider report there as well. We do kind of a macro overview on a weekly basis. So I would definitely check that out. You can find that at benzinga.com with their pro stuff as well. So thanks for watching, and we'll see you next